Well, hi everyone. Welcome to the Buffett and Beyond weekly stock analysis video. And this week we are going over the most popular stock in all the indices, and that is Nvidia. And remember, these methodologies are based on the book Buffett and Beyond, second edition. And remember, folks, if you want to live on this beach like Jimmy Buffett and watch those beautiful waves, you've got to learn how to invest even better than Warren Buffett. And, well, let's go over Nvidia. It's the leading developer of computing platforms that utilize its graphics, processing units, and software for various applications. Revenue by market platform data, 56% of 22 total, gaming 33%, and professional visualization, 6%, automotive, and there's something that's coming on, folks, 3%, and others, 2%. Now, production of semiconductor wafers is outsourced to Taiwan Semi and Samsung Electronics and some others. Now, R&D was 20% of 2022 sales, and here's something really interesting. International sales accounted for 69% of revenues. Last year, international sales were 81%, so that means more and more sales are coming into this country, which means we will be less worried about things that go on in other countries or between other countries. And here's another very important point. It has about 26,250 employees. And folks, last time we went over this stock, less than 6 months ago, it had 18,000 or almost 19,000 employees. So in other words, they had a 44% increase of people working for them. And that's because everything that they've been doing has doubled. I'm going to show you some really important numbers here. And, well, here they are. And these just came out the other day, about 2 days ago. And here's something I want to show you, very important. The revenue is up 100% over last year, right in here. Revenue was up over 100%. When you come over here, what to bring to the bottom line? Earnings per share, 429%. That means for every dollar this company invests back into itself, it earns $4. Again, for every dollar it invests back into itself, it earns $4 or gives $4.29 back to the shareholders in the form of market expansion. Now, when we look at the 5-year averages, the blue lines represent the average stock in our database, the green lines, Nvidia, and over the past 5 years, the clean surplus return on equity, three times, folks, almost 3 times the average stock. And these numbers have not been adjusted for this week's increases because they didn't give us these numbers yet. And net income, folks, we're looking at 47.5% versus 13% for the average stock. Revenue is 4 times the average stock. In fact, it just doubled its revenue. So now we are looking at 8 times the average stock. Same with net income. It's way up. It'd be off this chart, folks. So these numbers do not reflect the doubling of the numbers that this company had when we reported on it last time. That is a fast-growing company. And let's look at these numbers. And these numbers right here, this is the net income, and this is the clean surplus earnings. So you take traditional accounting earnings and you take out non-recurring items and future liabilities. The number for 2023 was $4 and change. Now it's $8, and these are the new numbers as of 2 days ago. And for next year, they expected to make $6, and now they're going to make $12. So this clean surplus return on equity is going up, and that's pretty amazing when you're at numbers even around 20% to have a doubling of the numbers. It's just phenomenal, folks. Retention rate, 98%, almost 100%. That means all the money, just about all the money they're making, they're putting back into the company in order to grow. And remember what we said before. For every dollar that they invested last year, they made $4.24 or 25 cents this year. 4-for-1. That is totally out of control, folks. That's absolutely amazing. And then we have our net income growth and our revenue growth, which we went over in the last slide. But what I want to show you here, years to pay debt. If a company takes all the money it's making and uses it to pay off debt, how many years would it take to pay off that debt? This company can pay off its debt in about 3 or 4 months. That's amazing. So that means interest rates will not hurt this company. And it's paying almost no dividend, which is great. We want to see a growth company put all the money back into itself in order to grow. And if it's growing 4-for-1, for every dollar it puts in, it's making $4.25. That's totally amazing. And let's see what it's done in 1 year. Oh my gosh, with the market up about 12%, less than 12, about 8%, this stock is up 107, almost 180%. Absolutely amazing. 5 years with the market up about 50%, this stock is up 600%. And folks, we bought it all the way back in here, just when it started outperforming the S&P 500. So we've had a beautiful rise with this stock. And then when we look at the year to date, and this is the stock itself, this is Nvidia. It's 500, up around 500, but it started at 150. Folks, we're looking at a stock that year to date, so just from the beginning of this year, and we're looking at, 8 months, this stock is up 233% as of Thursday when I'm recording this. So, folks, yeah, it's doing phenomenal. It's in our portfolio. It's been in our portfolio. And, of course, we just love it, and so do all the people that are investing that have the stock in their portfolio. So, folks, we had a really good week with Nvidia, Palo Alto. A few days before that just blew the socks off everybody. So you go out this weekend, you have a good weekend, you clear your head, you walk with your family, you watch TV with your loved ones, do whatever you want, take it easy, be safe, and folks, we'll see you back here next week, and we would love to have another stock like Nvidia. Okay, folks, take it easy. We'll see you next time.